2021 has just gone vertical. And that shows to me that we're in the late stages of a real estate bubble. And, I was talking about that economic saying, the cure for high prices is high prices. Eventually it brings around low prices because more supply comes onto the market because there's more profit to be made. Well, there's another cure for high prices: less currency in circulation. These high prices are brought about, a lot of it is just the amount of currency that is now in people's hands. Hi, everyone. I'm Mike Maloney, and I'm joined with Adam Taggart once again. Adam, how are you doing?
I'm doing great, Mike. Still filling in for Jeff Clark while he's busy writing. But let's start, because we got a lot to get through today. But we're going to start with a recent piece by Jeff titled, "While We Wait on Silver and Gold, Do This." I think there were two important points to that piece you wanted to get across, right?
Yeah, well, the first point is that people tend to buy at the wrong time. If a store runs an ad on a sale, they say, get this now. Well, it's 20% off or 10% off, and people rush in and they buy when stuff is on sale at a store. But when it comes to investments, nobody advertises that it's being sold at a discount. And what we see as a dealer, we're very sensitive to this because we see the price fall and everybody stops buying. And then the price starts rising when, especially when it's setting new highs, that's when everybody starts buying. And so it's really sort of backwards. And you and I were just talking about dollar cost averaging before we started this video. So explain that to people.
Sure. Well, basically, it's just what it sounds like. You're just buying on a consistent purchasing schedule. And the data shows pretty convincingly that if you dollar cost average into any asset, you generally get a better average price over time by doing that. But a huge reason why you do it is exactly what you're talking about, is it counters our emotional predilection just as humans to not want to buy while the price is going down because it feels bad. But, again, the old adage is you want to buy low and sell high. But a lot of people, conversely, because they're driven by emotions, tend to buy while the price is rising. So they tend to buy high and then sell low. So dollar cost averaging takes that out of the equation and just makes it a progression that you just follow no matter what.
Yeah. And our producer, Dan, was saying just before we started this that when he gets paid, he pays himself first. He gets a paycheck, but then he takes some of that and pays himself gold and silver. So his schedule for buying is whenever he gets paid. And I love that idea of paying yourself first, because when you buy money and when you trade currency in for money, the money is going to maintain value over long periods of time. The other point in this article is how well am I prepared for persistent inflation? And, Jerome Powell was saying it would be transitory. But he didn't say it very well. Then he clarified it. And basically, even when he clarified it, he didn't clarify it very well. What he said when he clarified it is that prices aren't going to go down. They're going to take this big leap and stay up there. And then they're not going to rise quite as fast as, what we're seeing right now. But who knows if that is true or not? It all depends. If we see a market break or something like that, if the stock markets start falling, they're going to print like crazy, and they're going to do direct stimulus and the government doing a bunch of infrastructure spending and deficit spending to create jobs and so on. And that is all creating currency that gets out into circulation and causes the retail prices to go up. Got any comments on that?
Yeah, well, just that, obviously we're already seeing that, and anybody who buys food or fuel or, has to pay housing expenses or medical bills, I mean, they're already seeing this, right? And Jeff mentioned in his article there an interview that I did very recently with Steve Henke, who's a professor of economics at Johns Hopkins, and he predicts that we're going to see regular government reported CPI inflation numbers of around 9% by the end of this year. So this isn't something that's just academic that you and I are just, spouting off here, Mike. This is something that is already in the real world and accelerating month after month here.
And that means that sometime or another, this trend of lower and lower interest rates, the disinflate, that's what disinflation is less inflation each year is disinflation. we're going to see that reverse sometime or another, and we're going to have interest rates going higher and higher. But they are probably, as long as the Federal Reserve and the world's central banks think that they have to manipulate the economy all of the time, that it can't get along without their brilliant minds, that people aren't good at making their own choices and stuff, and they have to steer the economy. As long as they do that, they're going to try to keep the interest rates low to stimulate the economy, which means they're going to be negative. They're going to be below the real rate of inflation, which means you better have well, for me, I'm going to have all of my investments in things that are going to stay ahead of inflation if I can.
Right. Like precious metals, which you just were talking about, real interest rates there. The more negative real interest rates are, the more tailwind is behind gold and silver. That's sort of the primary thing that drives them. So talking about, we've talked in previous videos, Mike, about the unintended consequences that government thinks they're so brilliant. They, force some unilateral solution on the system. And then, of course, all sorts of things happen that they don't want to have happen, like this runaway inflation now. Let's get to today's tweet of the day. It's really two charts provided here by Rob Warnock. This is a classic real world example right now of how quickly things are getting out of control. These charts basically show what have happened to rents in the US over the past year. I know you feel pretty passionate about this, Mike. So what's your takeaway?
Well, we're seeing rents are up 14% since January. So forget that 9% number that Steve Hanke was saying. Well, maybe 9% will be sort of consistent when you average it out, but I have a feeling it could be a lot higher. But this is huge. 14% since January that's like crazy. You annualize that and you'll come out over 20% per year of rent increases. So that's the first chart. And it's interesting. It shows, since the pandemic was declared, but you see it going up seasonally. It starts sometime just after the beginning of the year, it would rise. Well, this year it went up 14% since January. It's just absolutely crazy.
It's a moonshot.
It's a moonshot. And then in the next chart, you see median rent price in the United States, and you see the national vacancy index and the median rent price. And there's this old saying in economics, at least for the Austrian side of economics, the people that understand economics, the cure for high prices is high prices. When prices go high, more supply will come onto the market. Now, real estate, there's a big lag there because you got to build houses for more supply to come onto the market. But you can see how the higher prices have reduced the amount of vacancy. And then there's a couple of other charts. I want to skip the next chart in this tweet thread and go to the annual change in the Case-Shiller National Home Price Index. And you look at, 2016, 17, 18, 19, and then 2020, the last half of it was crazy, and 2021 has just gone vertical. And that shows to me that we're in the late stages of a real estate bubble. And, I was talking about that economic saying, the cure for high prices is high prices. Eventually it brings around low prices because more supply comes onto the market because there's more profit to be made. Well, there's another cure for high prices: less currency in circulation. These high prices are brought about, a lot of it is just the amount of currency that is now in people's hands. We've seen in the past, we've done some videos that showed the national savings rate, the explosion in M2, MZM, just all of these various aggregates. There's a lot of people that are just barely getting by, and they get stimulus checks, but they're sending me stimulus checks. What do you think I do with that? I just put it in the bank. It'll end up in an investment somewhere, and it'll help drive asset prices higher because they are printing currency. And then even the chart after that, which is the search volume for apartments for rent. It just shows you that since February of this year, that search volume, the Google search volume has just exploded. People are looking for apartments, and they have to search and search and search because now the prices are running away from them.
Absolutely, Mike. And I think the situation only gets worse when you look not just at rents, but at housing prices. And I want to get to today's chart of the day. But real quick, just a reminder, folks, please like this video and subscribe to this channel. All right, Mike. Yeah. So over here is an article on Zero Hedge that focuses, again, not on the price of rents going up, but on the price of housing. And as you'll see, we have a similar moonshot here. So what's your interpretation of this?
Well, a lot of the factor that drives rent prices is the cost of a house. There's a whole lot of people that are real estate investors, and what they're looking for is a home that cash flows, or at least one that comes close to breaking even, which is not a good thing to do. If somebody's buying a house and they can't get if the rent is not paying the entire mortgage, plus the maintenance and insurance and so on the house. If the house is costing you more, especially if you're buying at the peak of a bubble, then that's not a good idea. But I was with Robert Kiyosaki for many years, and he was the real estate guru of gurus during the peak of the 2006-07 real estate bubble. And I would travel the world speaking with him. And so looking for a cash flow investment is what people are doing. Well, the higher the home price, the higher the rent has to be to cash flow. It's a very direct correlation here. So to see let me see, it says Case Shiller Industries, America's 20 largest cities have exploded 19.08% year over year. And then it's got some of the cities, Phoenix being up 30%. And San Diego, Seattle, San Francisco, Tampa, Dallas, Miami, all posting 20% price increases. So Steve Henke was talking about 9%. This is enormous, and it directly affects people. But you can see that this is all going to come back, and it's increasing at the highest rate ever. This is the fastest pace of home price inflation on record, going back as far as you can go back and measure this. So it's a direct correlation, and we're going to, as more and more of our income gets used up on housing, there's less available for everything else. Then you need a raise. A raise, when everybody's going and asking for a raise, it causes the retail price of goods and services to go up because all the manufacturers of everything have to raise their prices to keep up. So this is a vicious circle, all caused by the world's central banks thinking they're smarter than the free market, and the government trying their best to come up with solutions that will get politicians elected. Nobody wants to do anything that sounds hard or sounds like we're going to, that it'll cause some short-term pain for a long-term benefit. These are everything they do is the easy way out.
Goes back to the demotivational poster that we shared a few videos ago. Government, if you hate the problems we create, just wait until you get a load of our solutions. So Mike, you're putting your finger on, I think, a really critical question, which is, look, how long can these sort of parasitic policies that the government is pursuing against the average citizen in their checkbook, how long can those continue before the host just basically begins to roll over here? And we've got a meme of the day and a quote of the day that go really well together in addressing this point. I want to get to that in 1 second. Just a reminder for folks, if you haven't yet downloaded Mike's excellent free book on investing in gold and silver, go to goldsilver.com/free book. And if you want to watch the interviews that I've been posting over on Wealthion, including some very recent ones that are very gold friendly, just go to youtube.com/Wealthion. So Mike, let's head over to the meme of the day here, which is a picture of a politician throwing a lot of money around. Can you tell us why this is so salient to what you've just been talking about here?
Well, the man's saying, look, he's so generous. And so this is a politician, and they throw money around, currency. Yeah, I'm going to get honked. He's throwing currency around because that's what gets him elected. And all politicians get elected by all of this rhetoric saying, I've got a good idea. We'll fix it by this. We'll fix it by that. I really liked Gerald Ford because he didn't do anything. Very few politicians. I mean, I look back, I liked Kennedy, but I was like 4 or 5 years old back then. And I look back at it now, he was actually quite a socialist. But most politicians, I just don't like them. But the great Milton Friedman once said, there are 4 ways that you can spend, he called it money. There are 4 ways that you can spend currency. 1, you can spend your own currency on yourself. 2, you can spend your currency on someone else. 3, you can spend someone else's currency on yourself. 4, you can spend someone else's currency on someone else. And what's interesting is you get more and more generous as you go up this tree. And so here's this politician just throwing currency away. I get 2 honks in this video.
Glad it's not me this time.
Huh?
Glad it's not me this time.
Look, he's so generous. But his wife says, he has your wallet. And it's so true, which brings us to the quote of the day. How long do politicians have to keep on promising heaven and delivering hell before people catch on and stop getting swept away by the rhetoric? Don't believe anything that they say. And when they promise you something for free, it's not for free. You got to think about, how's that going to be paid for? I want to thank everybody for watching. Thank you, Adam. It was great.
My pleasure, Mike.